you guys don't worry about any of this stuff, right? Like there's no one in Bitcoin has to worry about Treasury Fed cooperation to keep the issuance going.
I think we worry about it to a certain extent, Joe. I think everybody is focused on what inflation is going to do in the next decade or so here, including the Bitcoiners and the crypto folks.
Is it really interesting? Well, how does inflation or inflation trend sort of impact the way you look at crypto?
Well, a lot of investors in crypto see Bitcoin, rightly or wrongly, as an inflation hedge. And that's certainly something that a lot of investors and allocators seem to be concerned about these days. It remains to be seen whether or not we will actually get inflation. So far, the prospects for inflation seem fairly dim, but that's definitely part of the appeal for a fixed supply asset where there is no monetary discretion whatsoever, and the issuance schedule is totally predefined.
I mean, it's been noticed that the likes of Square, for example, and some of these publicly traded companies have been starting to look at crypto, Bitcoin, as instead of treasuries in some way, and using it as an alternative asset because perhaps they are looking to diversify away from the US dollar. So certainly it speaks to what the Federal Reserve is really doing right now. But crypto has been on a tear for many a reason, large part because finally institutional investors do seem to be getting in, putting a small amount of their money to work, but it's a big seismic effect on the overall Bitcoin market. What are you seeing at play that is driving us up past 18,000?
Well, there's endogenous and there's exogenous factors. So the exogenous factors are the macro factors that we're talking about here. The fact that we're in this largely unprecedented monetary environment, which is causing people to fear deeply negative interest rates, or fear the potential for inflation. But the endogenous factors are very interesting and somewhat underappreciated, perhaps. You talk about institutional investors getting exposure to Bitcoin. The last time we had a bull run like this in 2017, it was very difficult practically for those large institutional allocators to functionally get access to the asset. Yeah. The tools and the plumbing, a lot of this didn't exist back then. There were very few or none, there were no qualified custodians that could help you get exposure to the spot asset. There was very little in the way of prime brokerage. There wasn't really a robust lending market. The CME futures product only launched at the tail end of that bull rally, and it's very liquid today. So the endogenous factor is something that's being overlooked, in my opinion, a little bit. The fact that the plumbing for the industry can accommodate more capital. Of course, you do need at the same time there to be a good reason to allocate to the asset. And that's where the macro element comes in. But what we've been doing and what the entrepreneurs we back have been doing over the last 3 years or so is actually building that financial infrastructure, which can accommodate capital and can make these large investors comfortable with access to the asset class.
Nic, I am curious. I mean, go back a little bit to that run up that we saw in 2017, and just, I mean, we talked a lot back then about all the ICOs and the way that Bitcoin was sort of used as a funnel for those. That doesn't appear to be the same case now this time around in 2020.
Absolutely, and the way we saw Bitcoin trading was as a pass-through asset. It was a vehicle to get exposure to these really exciting ICOs that a lot of retail investors were piling into, and exposure to alternative cryptocurrencies that were even more volatile than Bitcoin. And that's very much not the case today. The SEC made their opinions extremely clear on ICOs. For the most part, they consider them to be investment contracts, and they've been cracking down very hard on some of these unregistered securities offerings over the last 3 years. So there really isn't the presence of these alternative coins that are being newly launched. That's just not a feature of the market today. It really looks like it's more a function of allocators taking a second look at Bitcoin, saying, maybe there is something interesting here. Maybe this is a slowly monetizing alternative monetary commodity. Maybe I should take another look at it.
Nic, 6 months ago, we saw the Bitcoin halving, or the rate of issuance newly decreased. 6 months after that, suddenly the price takes off. Pretty clear, totally separate things. Can we officially say on air here that the halving was already priced in and has no bearing on the price? Say it,
Joe,
be a hero.
This
Say it.
A lot of Bitcoiners are going to be very upset with me for saying this, but yes, I don't believe that the halving had a meaningful effect on the price of Bitcoin. It was something eminently forecastable. From day zero, we knew what the supply schedule of Bitcoin was going to be. So no, I don't believe that an incredibly foreseeable change was a driving catalyst. Yeah. I think the catalysts are outside of the market or related to infrastructure.